that there have been numerous times, obviously in the last 15 or 16 years, right, where Jackson Hole has been a big venue for releasing major pivot points in terms of policy, dating back to the 2010 one, I would argue, with Bernanke and where he kind of started laying out QE2 as a possibility. As I said before, I couldn't tell, and people have asked me, what is it? Is it Trump's hubris? Is it 5D chess, or is Trump controlled? That white flag point you made, I think, is going to be very instructive. If we don't get the white flag, we can eliminate hubris, right? Now we can say, going forward, we can now say either it's 5D chess or he's controlled, because strategically it's not working for the U.S. And I agree, China has a finite runway, and that it's ultimately a pain contest. My view of breaking point, we may have already started to see it with this whole soft form yield curve control episode of the last 10 days, particularly given how markets are reacting, which is at 10 years basically right back to where it was. The yen's already retraced over half of the move, the strengthening move, and is re-weakening. To me, I think we're probably likely to continue to get fits and starts through the rest of this year to this whole thing of, and it'll be more propagandization. No inflation. Right? Think about what Warsh talked about inflation 2 weeks ago, right? Like, inflation basically is what I say it is. That's the first step in propagandizing this. He knows. He's a smart man. He knows what I just laid out. Inflation's going higher. Has to. But he'll just lie about it, which is fine. This is what happens in these situations. I think you'll then have other interventions, and then they'll kind of back off and like, okay, that's it, and now we're hawks again, and it's a management process. And at the same time, you saw around mid-year, Trump came out and highlighted, hey, I met with NATO, we're all going to spend a bunch on military. Great. Okay, so within like a 5-day period, we had the U.S., the UK, Germany, Korea, and Japan all come out and say, we're going to borrow more money and spend it on the military. Okay. That's basically just defense stimmies, especially when the U.S. is supplying liquidity to sort of prevent higher inflation from driving bond yields to a point, or driving the dollar or these other currencies down to versus the dollar to a point where they have to sell treasuries. So this is basically just a sort of much more circular defense stimmy financed by the U.S., by dollar liquidity injections like we saw during COVID. And we know how that played out from an inflation and risk and gold and Bitcoin standpoint. But I also think there's a real genius to it, which is if the US, UK, Germany, Japan, and Korea all do this at the same time, then all their currencies against each other all debase against gold and against stocks and against inflation, but not against each other. And so you will get, in my opinion, higher inflation that is said to not be higher inflation, and you'll get a weaker dollar that it will look like on our screens is not a weaker dollar against all the fiat things. And anybody in the establishment who mentions the fact that gold is $6,000 or $7,000 will be ostracized. And so, only people like me in Cleveland who are not part of the establishment will point out that this is how. And it makes sense. I don't say this like, oh, they shouldn't do this. They're stuck, so they got to do something. And if I'm in their shoes, they're doing exactly what I would do. So I think there is, hey, respect. It's what I would do. And I know what to do with that, right? Nothing's changed with the underlying, right? Japan has been pushed into a current account deficit by our adventure in the Middle East. Oil's back over 80. Japan is short dollar oil by nature of their economy. They're ramping up their economy. They're going to need to produce more. That means they need to import more oil, which it translates to import more dollars, which translates to, inflation, which translates to selling of their bond market, selling of their currency. Like, nothing's changed. We've just, you just had a bunch of liquidity come in and try to push a level down artificially. And so, yeah, I absolutely think the market's going to push back to where it was. And whether it's 160 or 161 or 164, I don't know. But they're going to have to do the same thing over again. And I think it'll be really interesting to me to see the reaction to markets to that. because there has been this aura around Bessent, this aura around Warsh, that essentially they're Wall Street's guys. They're not going to do what Powell did. They're not going to do what Yellen did. They're practitioners. They've been in markets. They're Druckenmiller's guys. They're Soros's guys. They're going to have to do the same stuff because the math doesn't math. And so I think the reaction will be very interesting to see markets at that point. Like, I think you could get equities take off in dollar terms on that in the U.S. I think you could see gold really take off. And so I think you'll actually see equities continue to decline in gold terms, which has resumed over the last 10 days at least from, look, equities are still down almost 25% since the Fed started hiking rates in early 2022. So I think we get back to that debasement trade. And it's what they need. I think we're going to look back in a year and go, what idiot believed that the debasement trade was over just because you had a younger, better looking, nicer haired, richer guy at, maybe he's not richer. I don't know. His father's certainly richer, or his father-in-law, but at the Fed. Like, what idiot believed that? Why would you believe that, knowing the fiscal situation? And it just reminds me so much of the Doge situation. Everyone now is like, oh, Doge, how stupid was that? But you remember when they rolled it out, it was like, oh, yeah. Right? Oh, yeah. Everyone believed it. I'm like,
gold sold off.
Are you high?
For like 6 weeks. Yeah.
Oh, are you high? Like the math, and it's every bit as obvious as to me that the math doesn't math on the fiscal side, and that Warsh and Bessent have no choice. And especially since the Iran war. That's the other thing. Like, if we didn't do the Iran war, they would have had a lot more runway until it was proven the emperor had no clothing. The two emperors have no clothing, in Bessent and Warsh. The Iran war thing is such a forcing function. It's such a forcing function. And that's, I can't tell. People keep asking, is it 5D chess? Is it a reset? Is it Trump's hubris, or is Trump controlled? And I can't tell. My base case is it's Trump's hubris. He got taken in by how easy Venezuela was, but who knows? But when they have to revisit that, I'm going to be less interested in the actual event of, oh, hey, they're intervening in the end again, and much more interested to see the reaction to the markets because I think that'll be enough where everyone will be like, I got fooled again. I can't believe I bought into that nonsense. And I think you could see equities rip, gold really rip, and I think it could be good for Bitcoin. We'll see. That there have been numerous times, obviously, in the last 15 or 16 years, right, where Jackson Hole has been a big venue for releasing major pivot points in terms of policy, dating back to the 2010 one, I would argue, with Bernanke and where he kind of started laying out QE2 as a possibility. I said before, I couldn't tell, and people have asked me, what is it? Is it Trump's hubris? Is it 5D chess, or is Trump controlled? That white flag point I think is going to be very instructive. If we don't get the white flag, we can eliminate hubris, right? Now we can say, going forward, we can now say either it's 5D chess or he's controlled, because strategically it's not working for the U.S. And I agree, China has a finite runway and that it's ultimately a pain contest. However, we've already seen China has a greater ability to take pain than basically anybody else other than maybe the U.S., certainly more than I thought, but not more than and a greater ability to take pain than the Treasury market. They've absolutely shown that multiple times. And they still haven't even really had to make big adjustments. Like, people over there aren't even talking about this war. They're like, other than like, what is it with you Americans in the Middle East? Like, why do you keep doing this to yourselves, you idiots? They don't really say anything. And so there's things they can do, right? What do we hear about all the time? Oh, there's all this overproduction of electric cars. Well, take a look at the electric car penetration of China. It's still relatively low. This thing goes on, they can, pretty easily go, okay, in 4 weeks' time, every internal combustion engine passenger vehicle in China must be turned in and exchanged for a EV. What's to stop them from doing that? Boom, oil usage down another 2 million barrels a day. Check to you, Washington. I think they could absolutely do that. I've been told by people who know the country far better than me that they could do that. So they can't go forever. But again, it's just a pain contest. They can go longer in Japan, obviously. They can go longer in the U.S. Treasury market, obviously. They can go longer in Europe. And so here we are. So it is a strategic, we do need, I agree with you that we need to wave the white flag. And so that is a sort of reference point that we can go back to if we need to, and it becomes increasingly obvious, and we continue to see these leaks to the mainstream media of, hey, this isn't going well, that's not going well, the general said this and Trump didn't listen, and we still don't raise the right flag ahead of these midterms. Then you go, okay, this wasn't Trump's hubris, because he would back off. This is Trump's controlled, or there's some 5D chess play here that has yet to occur. 40 years of moving away from manufacturing and mining to financialization. There's just not the bench depth there. There's not the bench at all. And the education side is something I've talked about in numerous different podcasts, et cetera, is something that needs to happen. So it's encouraging to see now we're spending, $100 million on education over undefined period. And, that compares to $37 billion in Iran in 4 months, right? So not sure, in a perfect world, we spend $37 billion in education and $100 million on Iran. But that's the world we hope for, not the world as it is. The data center stuff, I agree. You're ultimately going to get constrained. Or you're going to hit the constraint. That is the constraint. Now, I don't know where that constraint is in terms of the physical world, the grid capacity, etc. I agree it's not happening fast enough. I've heard so many times people say we just need to go to wartime footing. Well, great. Well, let's go to wartime footing like 1940. Great. Here's what wartime footing was in 1940. We had a 25% of GDP fiscal deficit. Okay, we're at 6 now. So we had at 2 trillion at 6, so we'd have to ramp up 4x. We have to run $8 trillion deficits. Okay. To be like 1940. The Fed bought all of it, basically. The Fed's balance sheet grew 10x in 3 years during World War II, mostly at the front end, mostly cash financed, basically, right? At 3/8%. So you're going to have the Fed finance $8 trillion a year at 3/8% in the T-bill markets. What do you think inflation's going to do? Whoo, doggy. You're talking about 30, 40, 50% inflation for the next 3, 4, 5 years. Now, which part of the long end of the curve do you want to own? Where do mortgages trade at? What happens to the entire U.S. banking system who holds bonds as collateral? What happens to the real economy that's priced off the 10-year? Is the 10-year still going to be 4.7 when inflation's running 30, 40, 50%? No, you got to put in capital controls, which is what they did there. And also to fight the inflation, the highest marginal tax rate in the United States during World War II was over 90%, 90%. Still want to go to wartime footing?
Yeah, that's going to cause a stock market crash.
You'd crash the stock market. Well, you'd crash the stock market, and then it would basically go to the moon because you'd be running. It's one of the only inflation hedges. But it would crash and flatline in gold terms. But you're going to have to put in capital controls too, and capital controls, strict capital controls, ends the dollar's reserve status.
Well, there's
to prevent the crash.
Reset.
We literally have to tell everyone in the world, "Hey, you can't take your money out."
So that's your big reset, right there. It's forced.
That's and when you then apply it to this, hey, we're going to reshore in 5 to 10 years. You guys can go, it's a pipe dream. It's a friggin' pipe dream. Maybe 10 to 15, best case. Probably more like 20, and that's fine to the extent that it probably prevents these neocons from leading us into a stupid World War III. But that's the reality of it. Anytime I see someone say, "Oh, we're just go to a wartime footing like 1940," like, yeah. And even if you make allowances, to your point, I think it's a great point about AI. It's the equivalent of, hey, give an engineer a slide rule in 1949, and look, it's like 6 engineers, right? You give an engineer a bunch of AI, it can happen faster, a lot faster. But again, the constraint is, and oh, by the way, China's got AI too. And, so you're competing against someone who maybe doesn't have quite as good a frontier models, but they are very far ahead of us in the installed base of just actual production capacity. Well, another reason why I was so frustrated with this Iran war, which is the reason China caught up to us so easily in 20 years was because we were distracted from 2002 to 2020 with this nonsense in the Middle East. And I was as angry as anybody after 9/11 and all of that. And, I remember having a conversation at a private conference with, another, call it former military and guy and executive, corporate executive. He goes, look, and I think it was fall of 2002, we caught like 40,000 Taliban in the open in some valley in Afghanistan, and we called in B-52s, and we basically killed them all. He goes, in a perfect world, we publicize that, and we say, that's it. Don't do it again. We're going home. And now we're pulling back and we're reinvesting. And instead, and the Chinese have said this, you can read something called The Longer Telegram by a former senior official of a U.S. ally. So the Chinese said that they had a unique window of opportunity while we were distracted in the Middle East for 20 years. And the point is that we should have been doing all this metals work from 2002 through 2022. And the Chinese were, particularly after 2008. After 2008, they're like, wait, you're just going to print the money for this stuff when you get in trouble? Okay. And they went around the world, and you can see in 2018, by 2018, there were trillions in what they called opaque lending. Former World Bank chief economist, Carmen Reinhart. Opaque Chinese lending along the Belt and Road. Here, we'll lend you dollars and we'll give you develop and securing these supplies, dirt cheap. Because as you just said, if something's impossible, you know what the dollar value of 50 major copper mines is? It's a fugazi, it's ephemeral, it's nothing. The dollar can't buy you them. The dollar has hyperinflated against the major copper mines number 5 through number 50 that we need. There is no amount of dollars that can get you them because they don't exist. And the Chinese, apparently someone understood that while the Americans were chasing, dudes in flip-flops around Afghanistan and Iraq. And again, does this make me anti-American? No, it makes me practical in that when you do dumb stuff for 20 years, you don't just say, okay, I'm done doing dumb stuff now, and there not be a hangover, not be a payback, not be a catch-up period. And people, it's both a testament to the American spirit and a frustration is like, okay, we're done being stupid now. Great, we're gonna go right. Like, no. You don't get to drink 16 bottles of Jack and be like, okay, I'm gonna go run a marathon now. Woo! No, you're like, oh my God, you're gonna be out for a month if you're not in the friggin' hospital. And so that's, it's a missed opportunity. We can, I can joke about it, but to your point, this is where the real rubber meets the road. And then we tie this all back. Say, okay, well, Luke, I always try to bring it back. How can I make money with this? How do I position for investors? There is no way they can do this AI build out, infrastructure build out, reshore without it being massively inflationary. The bond market has to basically go down. So long-term bonds in the United States are down 90% against gold in the last 10 years. They're going to have to go down at least 99% more against gold over the next 10 to 20 years if we continue to try to reshore and build. And I think we need to. I think we're going to. And that's fine. Like, you just got to load up the suckers holding the stuff and then do it.